When you think about investing, there's a couple of things you have to think about. One is, are you good enough to do it yourself, or maybe do you need a robot? That's what we're going to talk about today. My name is Paul Barron. Welcome back to Tech Path. All right, so you guys understand, the investing side has kind of invaded the technology era of our society, and what we've seen in everything from apps to things that we're also looking at around sentiment analysis and TA that has now become a complete new data science altogether. Whether you're doing stocks, crypto, you name it, technology has invaded the investing world. So today we thought, hey, let's get some people on that kind of are moving in this direction. So joining me today is Stephen Mathai Davis, who is the co-founder and CEO of a company called Q.ai. Great to have you on the show, Stephen.
Thanks for having me on, Paul.
All right, so Stephen, let's learn a little bit about Q.ai first, kind of what you guys are all about. Tell me a little bit about your background in the company.
Yeah, certainly. So we're a startup that's bringing AI-powered investing strategies. When we say investing strategies, we're talking about the same stuff that you find at hedge funds and other elite asset managers to the retail investor, to the individual investor, to help empower him or her to achieve their investment goals. We're backed by Forbes Media. We just launched a couple of months ago, beginning to scale up and going through feedback loops, learning more about what folks are looking for. And really, our value proposition is the following. If you look at what's changing investing today, and I'm not talking about just general, I'm talking about what's happening in the hedge funds and the lead asset managers. It's the use of predictive analytics. And that's what AI is, right? It's probability-based investing. And what we're trying to do is bring these same tools and analytics and bring it to the individual investor who's being left behind totally.
Yeah, I think this is something that has somewhat revealed itself, especially when you look at how the aspects of kind of this, just pure elbow grease and sheer force kind of moved into the GameStop and Robinhood, scenario that kind of played out on Wall Street. And because of that, I think people started kind of, taking notice that there were those kinds of movements happening, meaning there's a lot of retail investors out there that are looking for other tools other than just congregating around a water cooler and saying, hey, are you buying that stock or letting it ride? Those kind of scenarios. So this is definitely moving in that direction. When you look at, because we've talked to a couple of companies here recently, especially in the crypto space, around how quant data is moving into structured, away from structured and traditional investment hedge funds, and kind of the bigger capacity of where investors are moving from and into what you're talking about, which is more retail investment analysis. How easy is it for you guys to bring that kind of technology down to the level where an average retail investor could potentially use this on a day in, day out basis?
Yeah, that's a great question. So for us, we're kind of an active hands-free experience. The retail investor doesn't have to do anything. So I can get into the details about how we're using deep learning and reinforcement learning to generate our investment strategies. But if you're a user on our platform, you don't need to know anything about that. All you have to be able to do is decide and say, well, I want to use this AI-powered value strategy that's very similar to what Warren Buffett does.
Right.
Or I love this trade idea that you guys have there, which is back to school. And I'm just going to put some money into it, and knowing that you guys are risk managing it. Or I want to play the opening of the U.S. economy, and your AI modules are looking at retail and restaurant stocks, and you've created a small basket that's going to expire in about a month or 2 months. That's just more or less a trade that you'd see at hedge funds or elite investment banks. I'm in. Don't have to worry about anything else. And by the way, that's differentiating ourselves from what you were talking earlier about what's going on with Robinhood and some of the other stuff you've seen on self-directed platforms.
Right.
We're actually managing the trade. We're doing all the risk. You don't have to worry about that. We do that.
Yeah, exactly. So, and I think that's the missing link right now in the investment triage for retail investors. Either you are doing self-managed, whether you're using Webull or Robinhood or any of those. Even if you're going on to TD America or Ameritrade or something like that, it's still all self-invest. Even there's a lot of tools within those platforms that kind of help you explore certain types of investing, but definitely not in the package that you're talking about, where you're essentially using quantitative analysis to move into structured investment strategies, which I think is amazing. Okay, so the typical service that you guys are going to offer to the street, how long before this is going to be available? We'll start seeing it kind of on an ongoing basis. What do you think the rollout plan is?
Oh, rollout plan is we're beginning to onboard folks right now. Yeah, we're still in beta. And I think
Hmm.
one more important thing of what we're doing is we're introducing the platform through a kind of a freemium gamified experience where
Right.
we're going to let people invest for free. And no, we're not selling your flow. We're actually losing money by letting you get on the platform and invest for free on one of our strategies. But our goal really is to begin building trust and transparency with the user. If you
Yeah.
listen to the feedback loops of everything that's happened over the last year, we're selling where people have been upset about flow being sold to HFT as well as other trading firms.
Hmm.
What we're trying to do is communicate very directly with our user base, our community. That's what we call it. That we're really about building the best possible investing experience for them. One of our taglines is a hedge fund in your pocket. And by that, what we mean is that you can use our different managed trade solutions and trade ideas and build your own hedge fund. Or you can start investing towards whatever goals that you might have. And I'm not talking about saving for retirement or retiring early. I'm talking about lifestyle and other types of aspirational goals. I want to go on a vacation next year. I've got two little toddlers. I'm using myself as an example.
Hmm.
I've got to save for Disney World. How do I save where I don't have to cut into my principal, but I can make some money where I can pay for my vacation so I can take my kids on a nice trip to Disney World?
Right.
Well, our platform can help you do that.
I like that which is kind of the whole gamification side of things. And if you look at, I think what is one of the masters at it, whether you like it or don't, whatever side you land on, Robinhood has been one of those apps that has been
Yeah.
able to really maximize the opportunity, especially around gamification of stocks. I like the fact that this could create some elements around education, especially in the sense of doing more hedge fund style investing without having to go into a structured capital scenario. Do you feel like that is what is missing from or for the retail investor today? Or do you feel like more people will continue to want to do self-managed?
I don't think people want to do self managed. I think they do self managed because of the products that are available to them.
Right.
Look, this is going to be controversial, but it's true. Just look at the fund management industry in general, $21 trillion, dollars. 3 to 4 firms, and this is not hyperbole, control
Hmm.
80 to 90% of assets. I'm from the industry, I grew up in it. There's no product differentiation. It's all about asset gathering. We don't care about the value. And that's where we start to value that users are getting out of the app. We just talk about the value add we're giving you. So
Yeah.
when we create Q.ai, and this is part of our ethos, it's about what's the value the user really feels that he or she is getting from us. And that's how we created this investment platform. And by the way, we launched it after speaking to over 3,000 people who we met through Reddit, Instagram, and Facebook, learning about their pain points. And if you really listen to people, they're really upset about the product differentiation available.
Yeah.
And maybe institutional Wall Street should pay attention to that. But more
Well, for
importantly,
sure.
they don't know how to invest and build a diversified portfolio. And they don't trust financial advisors.
Hmm.
And the products available to them right now doesn't really offer them anything compared to what high net worth individuals have.
Right.
And maybe I'm
Right.
being a little too passionate because I grew up in it and in some ways I've walked away from it. But man, when you peel back the onion a little bit and you start to see what high net worth individuals have, they have access to some of the coolest investment products, best in class managers, best in class advice, best in class analytics. And then you look at what the average individual has. They don't have any of that. In some
Yeah.
ways, they have access to some really archaic investing heuristics that nobody who's really managing money professionally uses. And that's what we're trying to bring to the average person.
Yeah, for sure. How do you see? Okay, so let's talk about this because you've got traditional Wall Street that I can
Mhm.
imagine is probably looking at this as maybe two ways. Maybe they're looking at it one as an education process for future investor customers of their own, or potentially as a complete retrofit of the investing society that's coming out, which especially is around millennials and soon to be Gen Z, that is going to be starting to utilize investment products and
Yeah.
services that would be something alternative to their dad's hedge fund, and maybe their segue into their dad's stockbroker, and their dad's analytic or access to Bloomberg Terminal or whatever it might be, that you're utilizing. Do you feel like this is going to be one of those things that starts to create a little bit of a rub in the
Oh,
investment
I
game?
definitely think that's the case. I get a lot of crap from some of my friends from the industry, right? Because we say we're quote unquote hacking Wall Street.
Right.
So that's how we communicate what we're doing to our community. We're hacking Wall Street, and we're taking the techniques that you'd find there and bringing it to the average investor. But talking more strategically, what you're talking about,
Mm-hmm.
as Gen Z and the millennials begin to mature in terms of income, in terms of investing, the industry itself is going to have to evolve. Really, what's available right now is investing products that are still kind of the basic baby boomer model with the
Right.
digital wrapper. Like for us, we're not charging fees.
Mm-hmm.
We're going to charge microtransactions and micro subscriptions because that's what the millennials and Gen Z generations understand. I'm a
Sure.
millennial. I pay for everything through subscriptions. We're not, if you start to talk to folks about fees and how you're going to structure fees and what you're going to charge, they're not really going to understand that, but they will understand a subscription model because
Right.
that's what
Right.
they become conditioned to. So you're talking about where the model for investing is going. It's definitively going in that direction.
Mm-hmm. I think that this is, evolution, especially when you look at where technology has come from in the investing space, the app development. I think, obviously, I don't want to harp on Robinhood. I'm not necessarily a big fan of Robinhood. I don't use it, but I am a fan of what they've done and been able to do. One is educate a certain swath of a demographic into investing for the first time. In many cases, a lot of people have lost money, have really kind of damaged their own potential net worths. But then there's also been some cases where people, just like in the investment game, where people have done a great job. Here's my question: is if you look at the market, and it is a marketplace, there's always a buyer and there's always a seller. There
Yeah,
has to be. So in the traditional market, as we know it, the buyer and the seller, someone's going to lose. And when you get into especially AI and any kind of robo investing, to me, I hope that it's not a scenario that it's always promising that, let's put everything on autopilot and everybody wins, because in the reality of the investment game, there has to be a loser somewhere. Otherwise, nobody has liquidity to make. How do you
that's a great point. That's a great point.
argue against that?
Well, forget the winners and the losers because I think typically when you're selling a stock or an ETF, you may be selling a stock or an ETF because one, you've taken a pretty good profit. It's
Right.
typically smart to get it off the table. And the buyer of it may experience a continued profit or
Mm-hmm.
may have a different reason for buying it. You may be selling it for another reason because you see another opportunity cost to go buy something else within that model. I don't know, in the case of AI, if AI is going to promise better returns. I think over time it leads to it because what it's doing is taking out the human element, the human
Right.
bias, and it's becoming more predictive and probabilistic. I know predictive analytics is the way it's described. I think if I were describing it more academically, I'd say it's more probabilistic investing
Mm-hmm.
because that's all investing is. And the reason I gravitated to AI and other types of quantitative heuristics is because it introduces further probabilities into the investment decision process.
Yeah. Well, and I think, when you look at this overall, the likelihood is probably going to, these types of tools and data sets and eventual kind of autopilot analytics are probably going to take the risk out for deep risk loss, meaning
Yeah.
someone making serious mistakes, trying to do self-managed funds and or self-managed direction. Even if you're talking about, have you guys looked at going into any kind of crypto analysis to be able to provide services to where some of these, platforms and exchanges have now crossed over to where they're obviously trading, whether you're on Webull or somewhere like a Robinhood, you can go in and trade some crypto. Anything moving in that direction for you guys?
Yeah, let me unpack that because I'm going to answer the first question or statement. But AI, the beauty of AI is now it's predictive probabilistic investing. So how do I build my model? Right.
Right.
And that's what your bias. Like for us, we really care about protecting our community from downdrafts.
Yep.
It's not important to be up 25% every year. What you
Mm-hmm.
want to do is avoid a year where you're down 20%. Because
Exactly.
to gain that 20% back, you've got to gain more than 20% without getting into the beauty of compounded interest. So over time, if you've got more wins, you will see an appreciation in your income, right? And that's the game with
Right.
hedge funds. One of
Yep.
my mentors told me that. Just don't worry about having all the home runs. You better miss the strikeouts. Just make
Exactly.
sure you shoot for singles and doubles, and you'll be
Get
fine.
singles and
Yeah,
doubles.
that's
Yeah.
a young guy when he told me that.
Yeah.
In terms of crypto, we're definitely expanding into it. I mean, I've spoken publicly about how crypto should be an allocation in every multi-asset portfolio. For us right now on the platform, we're still in beta. We have two strategies that actually have crypto mixed in with stocks and ETFs. So we actually have the first macro strategy that I know of, and I'm probably, for the retail investor, definitely. That's long bonds, stocks, short duration, maybe short stocks, long commodities, long oil, short forex, introducing VIX exposure, and
Hmm.
introducing crypto. So it's creating a truly multi-asset portfolio base. I believe digital
Right.
assets should be an allocation in there. Same thing with our new tech economy, where we're mixing in cutting-edge technology, stocks, ETFs, and crypto.
Hmm. So, well, I think when we got you on the show, I was very fascinated with what you guys were doing. The potential for this is pretty amazing. I think as we start to see, mainly because this has become a bit of the renaissance period for investors. There's a whole new demographic being ushered in to the investment kind of mindset, and also
Mhm.
thinking about both short-term and long-term investments for the first time, I think, in history, because we've seen the kind of the changing of the guard. The boomer, which has pretty much spent the last 20 years in this game in a very complicated way, and then this new era of investor that is moving out in a different way. Someone who is strapped with a mobile device, thinks on social media and Reddit forums and things around NFTs and kind of the evolution, which is a completely different change up. Do you feel like modern day Wall Street is ready for the next 20 years of investing?
Yeah, absolutely not. But that's just standard. The industry itself is being shaken up. The incumbents are being shaken up by the newcomers. I
Yeah,
would touch on one little bit, the real innovation that's occurring because of the advancements in technology and AI, the ability to really create truly personalized investing solutions.
mm-hmm.
And I'm not talking about us, but in general, the industry practitioners are trying to do what we're doing. If we can really put the bat on the ball in terms of creating these managed investing solutions, people will be able to start creating their own investing experience, right? It's going to become an experience
Interesting.
where I want to play my own themes, my own personal biases. And it's not about necessarily always being the S&P 500, but it's about generating positive investing returns that fit with their personality, their goals, and what they want to stand for.
Right,
And I
right.
believe that's where technology, at least in the fintech space, is really going to empower folks. It's all about
Yeah.
empowerment.
Well, very similar, to what like BlockFi does with their pies. They've been able to kind of personalize and give people the ability to share those pies and do some things to help others that are like-minded to move in that direction. Whether it's whether you're going to the EV space or renewable energy, or maybe you're a crypto head and really kind of going in that direction. But I see that this really seems to be a time. Obviously, we see fintech in an explosion period. We see kind of the monetary system being challenged really for the first time since gold and the petrodollar shift. Really, for the first time, we've seen a bit of a challenge with obviously digital currency and what that might look like in the next few years. If you were kind of analyzing this out over the next 5 years, how quickly do you feel all of this innovation can truly take hold in society? Because I feel right now we're on the very, very cutting edge, almost bleeding edge of what is in the process of taking place. What are your thoughts?
Yeah, well, I would argue the rate of adoption is going to be even shorter and quicker than it
Mm-hmm.
has been in the past. If you look at the last 5 years, the rate of
Right.
adoption, I'm just talking about in general in fintech and technology in our lives, it was so much more rapid, so much more quicker than it was over the last 10 to 15 years. So I
Yeah.
think it's going to be more rapid. I think the rise of NFTs as well as the prevalence of blockchain technologies across both consumer tech and fintech is going to further accelerate that.
Yeah, I think you're onto something. I mean, I've lived through a couple of big phases. One, I was a young computer science guy when the internet was born, and I was working with Microsoft, so I got a chance to see that birthing occur. And then the age of social media, kind of the adoption rate in which social media really took on to modern day society. And I think we're in that third kind of that third turning, so to
Yeah.
speak, of these adoption of tech. And the difference now, I think, to your point, is that we have a different demographic leading the charge. It's timing. It's timing. The demographic that is leading the charge completely understands technology. Their quick adoption capacity is there. Their cognitive ability to grasp the complex theory of what Bitcoin and blockchain really is there. And I think that's going to help us lead into the next era. So it's going to be fun, that's for sure. You guys are right on the edge of this, so it's going to be fun to watch all this
It's gonna be a
happening.
hell of a ride, definitely.
For sure. Last point. If you look down for an investor, for someone that's going to jump onto Q.ai, what are some of the things that you feel will be the key things they should be looking for in a robo and in an AI investment tool like yours? What are you kind of mentioned a couple of buzzwords, but what would be one or two things that me as an investor, I need to be watching out for from companies
Yeah,
like you?
forget us. Like we're really emphasizing it, but what I would say for the average person, it's interesting, right? These apps have made it so easy to invest, but
Right.
in some ways, it's very cookie cutter exposure, right? It's cookie cutter
Yep.
experience. The experience that all of us have is more or less the same. So what I would be focusing on is those apps that really try to get to know you
Yep.
and help you build a more personalized experience. And they can't do that unless they're trying to get to know you. By the way,
Yep.
just get on our app, even though it's free. We ask 15 questions. And full disclosure, this has nothing to do with FINRA or opening up the brokerage account. We're actually trying to get to know you to understand
Mm-hmm.
your risk tolerance. Like, do you have major liquidity events? We're asking
Right.
folks, are you looking to buy a home? And we're really trying to get to know you before we start saying, hey, go invest in this strategy or that, or maybe here's an interesting trade you want to consider.
Yeah, and I think that's where, machine learning, I've talked to many of my compadres from my past. We continue to develop some machine learning tech here, even on our own network for analyzing trends so that we can
Sure.
report on them. And just in the past 3 years, I mean, we've been doing this for a decade. The past 3 years, I've seen just unbelievable advancements in machine learning and obviously just the introduction to AI tools that are now playing into these data stacks, which is making it a lot easier for things like what you're talking about, this personalization, to actually occur. So very fun times that we're living in, that's for sure. Stephen, it was great having you on the show. Thank you so much for stopping in.
Thank you very much for having me on.
Excellent. All right, so you guys are listening in over on the podcast right now. Make sure and leave us a note. You can actually write a review right there, whether it's on iTunes, Spotify, or maybe even Google Play or Amazon. But the best thing to do is leave a rating. And if you're watching here on YouTube, subscribe right now. This is the best thing you can do for the channel. Also share this with someone. Maybe you have someone that is in your family or in your close colleague alignment. This is a good time for you to share the show, TechPath, and get it out there to them. Get it on their radar, because this is going to be a great tool for them, hopefully to help you in your technology frontier that you begin to take on around everything from investing, EVs, AI, robotics, and of course, autonomy. We continue to drive in all that. If you have an idea for a show, shoot us an email to producer@revernetworks.com. You can always hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.